You see, there's a certain cycle that repeats in the algorithm in order to generate liquidity and target liquidity at the same time. Welcome to the Bears series. In this series, I'll explain all the basics of ICT. We'll be building a strong base for your trading career. This is for those of you who are new or those who want to further sharpen their skills. So let's start off with the very first chapter, which is liquidity. More specifically, it's the buy side and sell side liquidity. Let's start by giving you the concept of liquidity. In ICT terms, liquidity refers to the amount of buy stops and sell stops at a key level. These are the stop orders of large hedge funds and banks that catch the market to attract the algorithm. Now, there's a little misunderstanding in the trading community. Liquidity does not refer to the buy stops and sell stops of retailers. It refers to the buy stops and sell stops of the large hedge funds and banks. When I say the algorithm is attracted to liquidity, I mean these orders of large hedge funds and banks. It does not mean the buy stops or sell stops of the individual trader. The algorithm uses liquidity as fuel to run through the large orders of smart money. Liquidity resides above every high and low, but not each high is significant enough to attract algo. Hence, we only focus on the liquidity that resides above obvious highs and obvious lows. At last, the market is always running to liquidity from liquidity. Now, this last statement is very true. I want you to note it down and review it when we are dealing with the charts or even when you are backtesting your concepts. Now, let's explain the buy side and sell side liquidity. Buy stops of active sell orders above the obvious equal or relative highs is called buy side liquidity. These are the buy stops of sell orders. These are the sell orders of large hedge funds and the banks, not the retailers or an individual trader. In a bullish market, we look for buy side liquidity and mark it as our next target. Sell stops of active buy orders below the obvious equal or relative lows is called sell side liquidity. Now, these are the sell stops of the buy orders of smart money, basically the large hedge funds and the traders who work in billions. In a bearish market, we look for sell side liquidity and mark it as our next target. At a key level, market will seek to do one of two things. Now, this one is very crucial. Market will either take sufficient buy side liquidity and target sell side liquidity, or it will take sufficient sell side liquidity and target buy side liquidity. You see, there's a certain cycle that repeats in the algorithm in order to generate liquidity and target liquidity at the same time. Which one will be one of those depends upon the market direction and higher time frames. You will understand it better once we go through the charts. Here you can see this is an obvious high which we have marked as BSL, buy side liquidity, and there are equal highs also marked as buy side liquidity. When we see this high formed in a bullish market, we want price to go and take it after a certain period hitting a higher time frame key level. And this one as well. There is an obvious low right here. You see, we mark it as sell side liquidity, and in a bearish market, we want algorithm to reach for it after spending some time retracing and hitting a higher time frame key level. Same goes for equal lows. Now let's look at the example of these. Our very first example is of GBP CAD daily chart. As I told you, liquidity resides above the highs and below the lows. There was a highlighted section in which I wrote, after taking sufficient buy sell liquidity, we target the sell sell liquidity. And after taking sufficient sell sell liquidity, we target the buy sell liquidity. It's a cycle that repeats an algorithm in order to generate liquidity and target liquidity at the same time. So here's an example. We have this SMT with EuroCAD. which makes it even higher probable trade for us to take. You see, after taking this buy sell liquidity, there were a lot of orders, sell orders of smart money right here above these highs. We took them and then we look for the opportunities on lower time frame targeting this sell side liquidity. Here we are on our 4-hour chart. Our framework behind this trade is that we have taken buy sell liquidity and now we are going to our sell side liquidity. That's our framework, and we need confirmations on lower time frames that could lead us to possible trade opportunities with the safe stop loss placement as well. You can see we did the market structure shift. That's our very first confirmation. And there we have SMT as well. That's enough confirmation that price is definitely going to give us a nice opportunity to ride this move. You see, we took our very first entry right here on 15-minute chart. This was an amazing opportunity. Then this one, and eventually we targeted the sales and liquidity. I actually sent this one inside my free telegram before the hand when price was moving around this level. I highlighted this fair value gap and targeted the sales and liquidity. Our next example is of gold. This is daily chart once again. You see, we have done this market structure shift on daily chart, and then we are targeting the sales and liquidity. Prices coming up, retracing higher, and then it once again target the buy sell liquidity. Or nearest strong liquidity becomes the sell side liquidity, which resides below the lows. You see, these are the lows we are talking about after price took this buy sell liquidity with this swift move. You see, right here. Once price took this buy sell liquidity, we go on lower time frames and look for the opportunities that could agree with this framework of going from buy sell liquidity to sell side liquidity. We are bearish, so we will look for the bearish setups. Right here on 4-hour chart, you can see price did amazing market structure shift right here, and then it repressed amazingly right here, very beautiful, and then it gone toward the sell side liquidity right here. This was a very good example of market maker sell model as well. This is our original consolidation, accumulation 1, 2, and then structure shift into the distribution. We could have executed right here, here, or even here, but this was the perfect entry. For next example, this one is very interesting because I actually took this one and sent it inside my free telegram as well. You can see this is USD JPY hourly chart. We are going from sell side liquidity to buy side liquidity. As I told you, sell side liquidity resides below the lows at a key level, and in this case our key level is this hourly fair value gap in a bullish market. It's already a bullish market, so we are expecting price to wick down and target the buy side liquidity, which is above these highs. After taking the sell side liquidity, we target the buy side liquidity, and then we go on lower time frame and see if price is giving us nice opportunities right here in order to ride the tide with this trade. The very beautiful trade setup formed on the 3-minute chart. So here we are on USD JPY 3-minute chart. It's the very first trade of 2025. I executed this one. The conferences were sell side liquidity and buy side liquidity with this strong SMT with DXY as well. We reacted from this change in state of delivery. You can see we did the market structure shift. Price came back inside this fair value gap, and then it did this empty, and then it shot it higher, giving us nice trade opportunities right here, here, and here. Here's the execution. I executed right here, took some position off here, here, and then took some partials right here as well. This was executed on my funded account. You can see I took the long from here and took some position off here, here, and then eventually right here about this buy side liquidity. So that's how we manage the trades based on sell side and buy side liquidity. You have to remember the fact that price will target the buy side liquidity once we have taken enough sell side liquidity, and target the sell side liquidity once we have taken enough buy side liquidity. It's a cycle that repeats inside an algorithm. Our next example, here USD hourly chart. You can see we are inside this hourly fair value gap. Price has taken sufficient buy sell liquidity, and now it is targeting the sell sell liquidity below the lows right here, here, and here. Once we are sure that price has taken enough buy sell liquidity and it has done some market structure shift on lower time frame, we go on lower time frame to see the trade opportunities and participate if the algorithm gives us opportunities. So let's go on 15-minute chart. Here we are. It was the last day of 2024. I took this one. This was very beautiful, right? We have taken the buy sell liquidity and targeting the sell sell liquidity. That's our framework, and we are in a bearish market. So bearish periods should be respected. We respected this 4-hour order block. Price did the market structure shift right here. It came up, gives us nice opportunity, and then shoot a lower to our drawn liquidity. There are a lot more things going in this single example, but I will leave these for the next lectures. For now, let's see the executions. You see right here, I took a scalp from this candle right here to this candle. I took two position and took both of right here. This was a scalp, and another long position on my investor account. This was right here. You see a short entry, and then I closed the position right here. It was a TP. That's it for this video. Stay sharp, stay safe.